Hi friends, Dave FX Hunter here with Forex market preview for the following week, 7th May till 13th May. So let's start with the news. What we're gonna have next week, the interesting is gonna be definitely the Wednesday about the dollar and mainly about the kiwi. We're gonna have a lot of rate decisions and the banks, central bank news from the kiwi, which is gonna be interesting because the kiwi is in the very interesting zone, which I will show you later. And what's gonna be interesting as well, the pound as well, and Friday will be about the cat, and Draghi will be speaking, so the euro. So pretty busy week, the following ones for the news, and let's go to the charts now. So we are looking to the dollar index, and so what do we see here? We saw this nice rally on the daily. It was almost 3 weeks in the row, and now what we are seeing, this first bearish candle. We had this two bearish candles on the daily, but this one is like a stronger one, and it's around this area, around this supply zone. However, I think the dollar still could go higher to the zone where we could potentially see the drop lower and the correction. Why do I think that as well? It's because when I'm looking to the COT data, I can see that the banks was adding the longs. They added a 3k longs approximately in the last week, but they added as well the shorts, so they potentially looking to the reverse the market at least a bit. And ideally what I would see is that they created this nice demand zone 2 weeks ago, and I believe they could drop the market lower where they will fill more orders, and then they could move it much higher. So I'm potentially waiting for this correction, and it could be nice for the trade higher. So let's continue with the gold. Now looking to the gold, and so what do we see here is this this consolidation, which was almost 3 months, and last week we saw this broken low of this consolidation. And and as well, what is interesting, the data, COT data. So what do we see here is that the market makers reduced, they closed last week a lot of longs. They reduced from 225,000 to 29,000, so they closed like 16,000 longs, and as well they added from the 89,000 to the 102,000 shorts, which happened in this Tuesday candle. So this is the data reported for the last Tuesday. So that means that this drop could happen from the previous Tuesday in that week, and this Tuesday it was reported. So this happened in here where they was closing longs and they added massive shorts. They actually added the massive shorts, the biggest positions in the past couple months, more than half year. Yeah, if I'm looking well, yes. So, but what that means, that of course doesn't mean that I will blindly short right now, yes, because what mostly happen is that they will a lot of people seeing this COT reports. I'm not only one who's having it, everyone's seeing this. So what most of people will do is when the market makers show their cards, and they will see, oh, they are massive short, so let's go short. Okay, that's gonna happen, but it's not gonna happen right now. So what I expect is that they will probably move a bit higher, where they could fill more up the shorts, and it could happen here even if I'm looking for this 4 hours chart. So it could they could probably go higher, because there will be the people who will be shorting. They will have the stop losses right above these swing levels, and here is the nice imbalance of the sellers and buyers, and I believe this could be nice area where they could fill up more shorts. And if we look to the volume, so we can see that this is the area where they be trading a lot, and every drop they was adding more. So if they go higher, I believe this will be area where they will want to fill up more shorts, and then potentially drop market lower into this nice nice daily demand zone around 1268. So this could be nice drop, but first, as I said, I expect move higher, and then they will be dropping it. So because of course that could be nice when the market drop like this, but I don't think it's gonna happen right now like that. This is the Australian dollar. Australian dollar was pretty smashed last 2 weeks. It dropped from this nice daily supply zone very low, and they even removed this demand zone, where I was expecting that market could bounce, but the strong dollar still is dictating the game. However, right now we are sitting in this monthly demand zone, and we have just right below this weekly demand zone, and we had removed this demand zone on the weekly as well. So what mostly happen is when the demand zone is removed, the market will reverse a bit, and then it could continue. So what I see here is if I look to the COT data, so what do I see is that the market makers, they added longs from the 49k to the 63, and but as well they added shorts from the 52 to the 68. So almost no change in the end. But so what do I expect now is that they added longs because they probably want to market reverse, and then they could be closing these longs and adding more shorts. So what I want to see now, if I want to go long on the 4 hours chart, I would be waiting till a clear break of this downtrend line, and then the retest, and then a possible move up. But I will not do any big targets. So because here is the supply zone, here is the supply zone, here is the supply zone. So for the long-term long, I mean on this daily, to come here, it could happen. Of course, it could happen because the dollar could do the correction, the big correction as well. But what I want to see first, if I go long, so I will wait for the break, retest, and then this supply zone must be removed. So what I will do is the first target will be here. I will close the first target, and I will move stop loss right below before the entry. And if this works and it go higher, it works. But if not, I don't care. But what I will be looking more than this, I will be more interested in the shorting, but not yet, because this is, you know, shorting the low, it's not so clever. So if the market is going up and I will see some nice, you know, the sideways moves with the volume on the tops, which will be telling me that the bears are coming into the game, and then potential removal of this demand zone and the drop even lower. So which could possibly happen because dollar is very strong now, and as I said, I expect this correction and then move lower. Yeah, so on the daily that could happen as well. So let's see how it will be played in the next week. Now we are looking at the euro. Euro was as well similar like all pairs. They just dropped from this distribution zone where was the market makers leaving the positions, and now it's dropping lower. We can see here on the COT chart. So what do we see here is that when the market was give me a second, I will show you here on the daily, it's gonna be better. So when the market was in this consolidation, we could see that they've been actually reducing the longs from the 236,000, and they was reducing longs and adding shorts as well to do this range moves. And then when they break through that, they was just reducing longs, and they did the shorts, not any big changes. Yeah, so this move actually happened by closing the long side. So they make this move by closing the long side, but they didn't add some proper short positions. However, last week they added, yes, so you can see that they added from the 86,000 to the 100. So the last week, this candle, there was this push lower, yes, and we are now in this supply zone. So from here we could potentially see that when they start to adding the shorts, this trend change will be more serious. However, they never added the shorts on the low, you know, so they added probably somewhere here in this area, and now I will be potentially looking for the market to visit this area, potentially even this one, and then add more shorts for the proper drop. And something similar is as well happening on the pound. So the pound, very similar chart. We had this consolidation, actually distribution, because the market makers are leaving the positions. So they've been actually, you can see they was aggressive longs around 89,000, 93,000. You see it. So they was reducing these longs, and you can see that 2 weeks ago when there was 113,000 longs, it was here on the top, on this top, and it was everywhere in the news that they are massively on the longs. And then what happened? Boom, yeah, they moved down. You can see that they did this move by the closing longs, not by the adding shorts, because you can see that they can be much more aggressively shorting than just 58,000. You know, you can see in the past they going much higher, and I believe they will want to go to these numbers, so they have to add another 20,000 longs, which will not happen here. They will probably go higher for that and then continue lower. So as I said, very similar chart as the euro, and I'm expecting now market doing the corrections, because now we are in this nice daily demand zone, and the potential move up and filling the orders, and the drop lower is very high. So for now, I would say, you know, for the short-term traders, intraday traders, if there will be the break and removal of the first supply zone, then the potential move higher, it's nice. However, it's not definitely my trading start, so I will be waiting for the market to come higher and then go with higher trends. So it could take some time, and I might will go up with some small positions as it's counter trend trade, but it's not in my main interest. This is the kiwi. Kiwi is very similar as well. Distribution, big supply zone, drop, massive drop, and where we are now, we are in the daily demand zone, monthly demand zone, and the weekly demand zone as well. If we look to the COT data, we can see that they've been closing longs, but didn't add any proper shorts. So very similar situation. I expect that the market could come higher, where they will be filling more shorts and continue lower with the strong dollar. And as I said, we're gonna have a news for on the Wednesday, if I remember well, and I believe that the market makers can use these data to move market higher and prepare for to fill more orders. Here actually should be as well the supply zone, because it removed this demand zone and the positions were probably accumulated in here, but we can see it as well on the 4 hours. Dollar yen, it was moving up on the 4 hours. We have nice broken trend line, and we have tested this demand zone. On the daily, we have nice established uptrend. However, this supply zone is taking the control, and as well we have in this area, I checked last time, so we have as well in this area high volume fluctuations. So we can see that this zone is the zone where the volume came into the game, and they was pushing the market lower, and I believe these bears will be protecting their positions, and they can drop the market lower again. On the weekly time frame, we have a downtrend, and we are in this supply zone, and we have last week closed with this nice doji candle. So what would we expect is probably that the market could drop lower, and we can see as well on the COT not any big change. They are not adding any big positions, you know. So what happened as well is that here was big reducing of the positions on the kiwi on the yen. However, it was because the end of the contract, but from that moment there's not any big changes, and sentiment is still neutral, so it could go up or down. However, as I expect this correction on the dollar, and as I mentioned, this volume cluster which occurred in both brokers, I believe that it could push the price lower again, and this weekly supply zone potentially maybe somewhere here, where is the, and then continuation up. So this is US dollar, Canadian dollar. We had a nice bullish impulse, and right now we are below this daily supply zone, which we can see that there is a lot of pins, and the last candle was closed with this pin bar as well. On the 4 hours, nice sideways movement. On the weekly here is not any zone, but we have this bearish engulfing candle and 2 candles in the row. So this is the strong zone of the structure. And what the volume says, if you look to the volume, nothing extra, but we can see that these candles which was on the with the top, so there was some volume, so potentially this could as well do the correction. I still believe, you know, this looks like I'm saying the same thing about the old charts, but this is all the majors, and they are controlled by the dollar, and so I see the potential retest of the lowest area for sure. And what the COT data says is that the market makers, they added longs from the 48, and they added shorts as well, so they want to keep the price in the range. And we will see if they will be doing some big reversal, but I don't think so that it's gonna be so big, because we are still 67% to 33 for the longs, and it is a lot of space to go higher. So my target is 133. This is my target, and there is a positive swap, so, and I have a positions opened here, so I will not be closing them. I just log the take profit, I just log the entry, and I will be waiting. If the market drops lower, I will add another long for the going higher. But the question is how deep they will want to go, if even they will want to go deep, because the Canadian dollar is very weak now. And let's see, so we will have on the Friday the data from the Canada, and we will see how it will move the market. Swiss franc, it's in massive uptrend on the daily, just came into these 2 supply zones where I potentially will be expecting to market drop lower, and I will be taking the counter trend rate with the small positions. On the weekly as well, the massive uptrend, and now we coming into a supply zone. We broke this trend line, so that doesn't mean that the trend is changed. This is actually not uptrend, this is just the bullish impulse, because to have an uptrend I need to have new high, higher low, and higher high, then I can draw the trend line. So this is not still uptrend yet, and I think it's gonna happen. They will create it for the rules, so they will come back supply zone, fill up more orders, and move higher. So it's potentially can happen. On the monthly, we had this downtrend, and this demand zone reaction, strong reaction, breaking through the trend line, so potentially move up into 107 zone, And if we look to the COT data, we can see that market makers are committed into moving price higher because they are 63% in the longs against 37%. The net positions are rising, they are adding longs and they're reducing shorts, so it's a very good signs for the going long. However, I will not be longing from the tops because I like to take a longs on the drops, so I will be waiting the market drop lower, and from there definitely longs, and I will be holding it. So overall summary is that the dollar is very strong now. However, I think this bullish impulse movement is now limited, and all pairs could do the corrections because the market makers will want to fill up more orders for the continuation of the trade, because they never buy high and they never sell low. So I believe that now we will potentially see the corrective movements, and then the dollar will be continuing into killing whole other currencies in the markets. So this is everything for me for the majors today, and I wish you great weekend, my friends, and see you on the markets. Bye bye.